I think the only difference I have on this thought process is because they are state-owned banks and they are policy statement of the governments, it's they may be defensive today because the balance sheet is looks heavy on the NPL and maybe not reflective in China yet. But on the other hand, as economic recovery kind of comes back, I think the bank balance sheet will be becoming healthier with the more injection from the government as they can afford, which various stages of their evolution. And effectively, because it's policy driven, again, it fuels into the growth. So the capex cycle is a lot driven by the banking system than the alternative. By definition, the non-bank or the alternative have to remain alternative and cannot come into mainstream. But so far, as of now, there is an opportunity of next 3, 4, 5 years where the incremental growth will be in the non-bank than the bank. There is an opportunity set.
Specifically India?
India and China both, actually. In China, again, I was talking before with my colleagues as well, there has been haves and have-nots. Some people get credit, even though there is decent liquidity, and some sectors and some companies don't get credit. While in India, for sure, it is a macro issue where the banks are not lending at all. And therefore, any growth opportunity, buyout, acquisition, growth, capex, has to be funded from non-bank for the time being. Also, the Tencents or any of such companies which are or peer-to-peer, it's all about statistics. So when so far it is granular and similar, I think it works. When it becomes large and bespoke, I think the model will fail. And that is
the model will fail.
That is exactly, yes. And that is where we are talking about corporates, individual large corporates, which cannot get funding from platforms because size will be too difficult to absorb, and the analytics of automation won't work. It has to come back into the picture, the experience and the history, because a lot of these companies have a history. Like one can look at the metric and say, oh, okay, this company looks good, but when you see the history of 98 all the way till here, you may not want to touch it at 2 times EBITDA, while on the other hand, you are willing to touch a company at 6 times and still it works. So that part, the intelligence will take time to build. And that's where I see that granular, small lending, fine, works. But large lending, large loans, still the jury's out.
Again, timing point.
I think on top of that, there is one more aspect, which is what is happening in India. Once the NPLs have been recognized, underlying growth is there. And China, yes, it is slowing down and it will slow down over time and then again come back up. What we are talking about is still mid to high single digit.
It's still slowing in India.
And India is still mid to high single digit. It's like 6-7% compared to what we talk about, 0 to 2. Now you have here a demand for credit. And it is self-fulfilling because there is a growth, there is a demand for credit, there is a credit, there is a demand for growth. And that part is on top of the bank lending, which again currently is being fulfilled equivalent of whether you call it trust loan, alternative lenders, non-bank finance companies. But I think that will normalize. If you look at kind of over the hump outlook, overall I think the banking sector, because they are government owned, will remain the bedrock and have to be for the capex cycle, and the non-bank would play on the margin on alternatives where the banks don't, which is consumers, real estate, regulatory issues in various countries on various sectors, and policy changes as they come along the way. But growth for both the sectors is definitely visible, and that is something that I think is different from Europe or the US.
So does that, going back to one of the points that Rob made very early on in the conversation when he said that there are numerous markets out of there that are mispriced right now. Real estate was one of those markets that he pointed to. Are you saying that is not the situation in India?
No, real estate market is mispriced. No, it is not. No, India is starved of real estate financing. The banks have a lot of restrictions on lending. And by definition, the real estate market has been kind of flattish for the last 5 years when the inflation has been there of even 5-6%, which means it is down in the real terms. But is it picking up again with the growth? Yes, it is. Now, China may have a different aspect to it, which probably on the real estate, India is a very different story. The bank's exposure to real estate is fairly limited. It's by design. The regulator has been very, very anxious about capital market and real estate for a long time in India, since 91. Therefore, by definition, the NPLs of the banking sector in this segment is very limited. There are 15 ARCs at present. We own one of them. And that tells you that licenses are available. Actually, they are available on tap. People can put up the ARCs because I think the government has realized if people, and especially foreigners, go and want to burn their money in India, be my guest, right? Because these ARCs in 8 years have paid no dividend to any of their shareholders, forget about their banking shareholders, and have not done at all anything close to what the size we are talking here from Huarangs of the world. If you add up the total equity of all the 15 ARCs, I think it's like $400 million. You're talking nothing, right? But the NPL volume is $120 billion. The question is, will the state bank sell? The same question that he asked for China. Will the state bank sell? You only sell before first you recognize. That part, I think the battle has been won by the governor. The banks have recognized. Then it is a process to sell, which is because you are government owned, there is a supervisory and spotlight on you, whether you are supposedly giving discounts, whatever, right? And then third is there capital? Is there market there? Are there people who are willing to buy? And as I see now, I think the confluence is coming together where the sale will happen. There are buyers out there, mainly foreign buyers, because domestic capital is very limited for this asset class. But real estate, no. Real estate is all falling back into the non-bank sector where the biggest exposures are. And that is still in a growth cycle, in my opinion. I think currently the non-banks have, new non-banks have $8 billion balance sheet. Still some way to go before you see the NPLs.
Okay, great. Over here, Steve.
Steve Tannenbaum, Poetry Asset Management. I'm wondering if you've discussed a lot about the NPL opportunities. Are there performing opportunities? If there are performing opportunities, are there examples of... Sure. So are there non-performing opportunities? And are there examples of workouts where things have not gone according to script that either of you have had and how they've proceeded?
Yeah.
You want to take a first crack?
All the time. So one thing I can admit is nothing will go as per plan. Either it will be above plan or below plan. And NPL is a wild journey. It does happen. It's happening in India with few of our assets, and it happens in Singapore too, or in other geographies that we invest in. Key is what skill set you bring to the table to find the solution to the problem that is addressed, and with the stakeholders, which are state-owned banks. So that is where the value is. It's not about enforcement. Yes, you need to have enforcement tactics. You need to have all the legal lawyers and whatever in your arsenal. But ultimately, what will boil down to is how do you meet the objective of a non-commercial lender and a workout situation where the borrower needs oxygen to rescue itself out. And that, I think that is where the art is, and I think that recovery process has been actually pretty good. Whatever I see of our situations, I think the worst case is you lose like 20 cents on dollar, and the best cases are where you make 4x. So that is the kind of risk reward we are talking about, where you enter in the NPLs.